If you're getting ready to buy a home and you're paying cash, this video is not for you. But if you plan on financing your purchase, I'm going to cover a list of 10 things you're going to want to avoid until after you've closed on your home. The home mortgage process is very structured, loaded with rules and guidelines that you must follow in order to be approved. Remember, a bank is going to lend you hundreds of thousands of dollars, so it's not too shocking that they want you to follow the path they have defined. Some of these tips are ones you might have heard about, while others might just surprise you. Nevertheless, these are the mistakes buyers continue making that end up costing them the home of their dream. Take heed and don't do these 10 things. Hi, I'm Joe Manassa, author of The Business of Getting Business and the creator of Manassa.com, where I've helped tens of thousands of people buy and sell homes. I would like to help you too. If you already are a subscriber, thank you and welcome back. If you're not a subscriber, please consider becoming one now. We offer the most thorough and accurate housing market reports on YouTube, plus answers to your real estate frequently asked questions, and we also provide virtual tours of some of the most beautiful homes in Tallahassee. Simply hit subscribe to get started and the bell so that you're the most informed buyer or seller in your next real estate transaction. When preparing this video, I reached out to my good friend Mitch Wright at Bay Capital Mortgage for a list of common mistakes he's seen buyers make that ended up costing them the loan on a new home, or they at least increased the interest rates that they received. Either way, you want to avoid these 10 things. Number 1, do not change jobs, become self-employed, or quit your job. One of the first things lenders will want to know and verify is your work history. They will use the information as the basis for your loan offer you receive. So if you change your job, even for what might be a better one, you very well likely could change your loan status. It's best to wait until after you close before changing employment. Number 2, do not buy a car, truck, or van. The amount of cash you have in the bank, plus the monthly payment obligations that you have, are both big factors in the amount of money a lender is willing to provide you for the purchase of a home. When you purchase a vehicle, you decrease your cash and increase your obligations, and neither is going to do anything positive to your loan approval. Wait until after closing to shop for a vehicle. You might be thinking, who in their right mind would want to buy a car while they're also trying to buy a house? But it happens. It's far easier to get a car loan than a home loan. Follow Mitch's advice and don't even look at cars until after you've closed on your new home. Number 3, do not use credit cards excessively or let current accounts get behind. As mentioned in the previous point, the monthly obligations that you have are a primary factor in your loan approval. Credit card debt increases those obligations and decreases your desirability as a borrower, so keep your credit card spending to a bare minimum until after you close on your home. Number 4, do not spend money set aside for closing. Your loan approval will be accompanied by a down payment requirement. You might know that you can pull the money together right before closing, but the lender will want to see that the money is sitting in your account untouched. Do not spend any of your down payment money or you'll likely see your loan approval reversed. Remember, lenders have seen it all before. They've been lied to and seen every trick in the book. In order to protect their investment, they have some rigid rules that they follow before they lend money, and this is one rule that you do not want to violate. Leave that cash for closing alone. Number 5, do not omit debt or liabilities from your loan application. This is one that goes in the "it goes without saying" category, yet we see it happen, so it needs to be said. Do not lie or omit information on your loan application. While this might get you an early contingent approval, it will turn into a denial when the lender ultimately finds what you omitted. And trust me, the lender will find out. Tell the loan originator everything about your financial condition, and he or she will work hard to find the right loan for you. Remember, they want to close the loan too. It's how they get paid. But omitted information just leads everybody down the wrong path until it is found. Number 6, do not buy furniture on a credit card. You'll probably need some new furniture for your new home, but do not commit to buying any until after you close. Remember, all obligations are considered when your loan approval is granted, so adding obligations is very likely to reduce the loan for which you're approved. Even if the furniture deal is completely financed, it will impact your monthly obligations ratio. Wait until after closing to go furniture shopping. Number 7, do not originate any inquiries into your credit. Every time somebody pings your credit, it can lower your credit score. So even if you're just shopping with plans on buying something after closing, you can actually hurt yourself without even committing to buying something. Do not allow anybody other than your mortgage lender to pull your credit score until after closing. Number 8, Do not make large deposits without checking in with your loan officer. If you're receiving a larger than normal amount of money, ask your mortgage loan originator how to proceed. There are very specific rules and guidelines that they must follow in the loan approval process, and a large deposit could appear as another loan and terminate your home loan approval. Keep your mortgage originator in the loop before you do anything significant financially. Number 9, do not change bank accounts. By now, you should start to get the message that change is a bad thing during the loan application process. Changing bank accounts falls into this category, as well as the banks want to see a history of your money flows. Changing accounts breaks up that flow, and it is a common practice by people who wish to deceive the lender. Don't put yourself under this scrutiny, as it could very well lead to a termination of your loan approval. And number 10, do not co-sign on a loan for anyone. Last but not least, do not co-sign on a loan for somebody else. Even if the agreement calls for you to have this monthly obligation, your signature is actually an agreement to guarantee all payments. Thus, your current lender will have to add that debt to your current list of obligations. It's best that you wait until after closing to take on any other debt. So that's the 10 things you want to avoid so that you do not lose the home of your dreams due to a rejected loan. The common theme of all 10 is to reduce spending and not to make big changes. Follow this advice and you'll be a happy new homeowner in no time. If you would like to see more videos about our top tips for home buyers, I have assembled a great playlist that you can view by clicking on the box on the top left corner of your screen. For a playlist of our top tips for home sellers, just click on the box below it. Please remember to like this video and subscribe to our channel so that you never miss anything.